What if I told you one of the biggest investing themes of the next few years may not come from flashy technology stocks or short-term market hype, but from something every single person eventually needs: healthcare. Think about it. More hospitals, more diagnostics, more medicines, more health insurance penetration, aging population, lifestyle diseases, mental health care, preventive health care, and even something as simple as regular blood test. Now ask yourself this. In a country like India, where healthcare demand continues rising, the pharmaceutical industry is expanding rapidly. Could healthcare and pharma become one of the strongest long-term investment themes? Because in 2026, investors are quietly asking an important question: are pharma mutual funds making a comeback? After all, India is already among the largest pharmaceutical producers globally. Exports continue growing, hospitals are expanding, diagnostic businesses are scaling up, and healthcare spending is gradually increasing. But before you rush to invest, there's something important to understand. Healthcare and pharma investing isn't always smooth. Some years the sector looks unstoppable, and some years it becomes painfully slow. US FDA concerns, export pressure, pricing regulations, global demand slowdowns, healthcare sector valuations. All of this matters, which means if you want exposure, you need patience. And perhaps the smartest question to ask is, instead of chasing individual pharma stocks, should investors look at pharma mutual funds instead? That's exactly what we'll explore today. Hello investors and welcome back to the Equitymaster channel. I am Mitali Doke, research analyst, here to simplify mutual fund investing and guide you on a smarter wealth creation journey. In this video, we'll break down 5 pharma mutual funds to watch in 2026. Understand how they invest, what makes them different, and what type of investor they may suit. Why pharma is back in discussion? Before jumping into funds, let's understand something. Why are healthcare and pharma back in discussion? Think about the larger picture. India's pharmaceutical ecosystem continues expanding. Domestic medicine demand is growing. Medical tourism is growing. Hospital chains are expanding aggressively. Diagnostics penetration is increasing. Healthcare awareness after the pandemic has permanently changed consumer behavior. And globally, the healthcare story is evolving too. Biotech innovations, cancer therapies, diagnostics, medical devices, generic medicine exports, even aging populations across countries create long-term healthcare demand. Now here's the interesting thing. Healthcare is different from cyclical sectors. People may postpone buying cars, delay buying houses, reduce discretionary spending, but healthcare, that demand often continues, and that's why many investors view pharma and healthcare as both a growing opportunity and sometimes even a relatively defensive sector during uncertainty. But again, not every healthcare fund invests the same way. Some focus more on large established pharma companies, some take aggressive bets on mid and small cap healthcare businesses. Some include hospitals and diagnostics, some even have international healthcare exposure. So let's look at the fund number 1, ICICI Prudential Pharma Healthcare and Diagnostic Funds. Now imagine this. You want exposure to healthcare, but you don't want to bet only on one pharmaceutical stock. Instead, you want a diversified basket of pharma leaders, diagnostic businesses, and healthcare related companies. That's essentially the thinking behind ICICI Prudential Pharma Healthcare and Diagnostic Fund. This fund follows a healthcare focused thematic strategy. It stays deeply connected to the healthcare ecosystem rather than spreading investments everywhere. And in 2026, that matters because healthcare is no longer only about medicine manufacturing. It includes diagnostics, healthcare services, medical innovation, and hospitals, consumer healthcare trends. Now, one thing many investors may appreciate here is balanced approach across market capitalization. Instead of depending entirely on smaller risk companies or only giant names, the strategy combines different healthcare opportunities. But here's an important investing truth. A thematic healthcare fund is still a sectoral bet, meaning if pharma sentiment cools down, returns could slow. And yes, there could be phases where performance temporarily looks boring. But historically, focused healthcare exposure has helped investors participate in the long-term sector growth while remaining competitive against benchmarks over multi-year periods. Over the 3 years, fund generated 25.21%, marginally outperforming the benchmark return of 24.76%. Over a 5-year horizon, the fund delivered 16.10%, also outperforming the benchmark return of 15.08%. So the real question becomes, do you believe India's healthcare story is only beginning? Because if the answer is yes, then thematic healthcare investing becomes worth watching. Now let's move to the second fund, SBI Healthcare Opportunities Fund. Now this fund is interesting for a different reason, because instead of simply following size or popularity, it tries to identify fundamentally strong healthcare businesses across segments. Think pharma companies, hospitals, biotechnology, healthcare service providers, medical equipment businesses. That broader healthcare lens is what makes the SBI Healthcare Opportunities Fund stand out. And honestly, this becomes relevant in a market like 2026. Why? Because healthcare growth isn't happening in only one pocket. Hospital chains are expanding, diagnostic businesses are growing, specialty pharma continues evolving. Preventive healthcare awareness is rising, meaning healthcare itself is becoming a much larger ecosystem. Another interesting thing, the portfolio includes exposure across large cap, mid cap, and smaller healthcare businesses instead of staying extremely concentrated. Why does that matter? Because sometimes large companies bring stability while smaller healthcare companies may offer faster growth opportunities. Of course, higher opportunity also often means higher volatility. That trade off always exists. Performance wise, this fund has remained competitive against benchmark over longer periods while benefiting from India's expanding healthcare ecosystem. Over a 3-year period, it has generated 25.45%, slightly ahead of the benchmark return, which is 24.79%. Over 5 years, 17.55%, outperforming the benchmark at 15.09%. But here's a question for you. Would you rather own one pharma stock and hope it works, or diversified healthcare basket managed professionally? That's something worth thinking about. Third is the UTI Healthcare Fund. And this one becomes interesting if you believe in one thing. The biggest growth stories in healthcare may still be emerging. Because while giant pharmaceutical companies bring stability, sometimes the faster growth happens in smaller healthcare businesses, specialty pharma, diagnostics, niche healthcare manufacturers, hospital linked opportunities. And that's where the UTI Healthcare Fund takes a slightly different approach. This fund carries meaningful exposure towards mid and small cap healthcare businesses while still maintaining diversification across the healthcare ecosystem. Now let's simplify what that means. Higher growth potential, possibly yes. Higher volatility, also yes. Because smaller healthcare companies could grow faster, but markets could punish them harder during uncertain phases. And we all know 2026 markets continue seeing periods of volatility. Global slowdown fears, healthcare pricing pressures, regulatory risk, export concerns. So if someone chooses a fund with smaller company exposure, patience becomes extremely important. The interesting thing here is that the fund doesn't only revolve around one category of healthcare companies, instead, it spreads exposure across pharma manufacturers, hospitals, and healthcare services. Over 3 years, it has generated 24.93% returns, slightly below the benchmark return of 25.35%. Over 5 years, it delivered 13.99%, marginally underperforming the benchmark at 14.33%. So ask yourself, are you looking for stability or are you comfortable taking slightly more risk for potential long-term growth? Because that answer matters when choosing thematic funds. Tata India Pharma and Healthcare Fund. Now fund number 4 teaches us an important investing lesson, and that lesson is simple. Good sectors don't always mean smooth returns. The Tata India Pharma and Healthcare Fund focuses heavily on healthcare and pharma businesses while maintaining exposure across market cap. What makes this interesting is its blend. You get some mature healthcare names for stability alongside emerging healthcare businesses for potential growth. Sounds ideal, right? Well, not always, because healthcare themes also move through cycles, and there have been periods where performance lagged benchmark returns. Now, this is where investors usually make mistake. They see short-term underperformance and immediately assume the entire theme is broken. But sector investing doesn't work like that. Some years pharma runs ahead, other years it consolidates. That's normal. The real question is, are you investing with patience or expectations of instant return? Because sectoral funds reward long term conviction far more than short term excitement. Last but not the least is the DSP Healthcare Fund. Because it does not only stop at domestic healthcare opportunities, the DSP Healthcare Fund includes exposure to both Indian companies and global healthcare opportunities. And in a globalized healthcare world, that matters. Why? Because innovation isn't happening in only one country. Medical technology, biotech developments, global pharmaceutical leaders, research led healthcare businesses, these trends operate internationally. At the same time, the fund also carries exposure across different healthcare market caps and smaller healthcare companies which could potentially benefit from long term sector growth. But again, let's stay realistic. International diversification sounds exciting, yet performance may still go through periods of underperformance versus benchmarks. That's investing. No theme moves in a straight line. The important thing is understanding what you own. Let's move to the final verdict. So, which is the best pharma mutual fund in 2026? Honestly, there is no one size fits all answer. And that's where many investors go wrong. They search for a magical best fund instead of asking best for whom. Someone looking for relatively stable healthcare leaders may think differently. Someone comfortable with higher volatility and mid and small cap healthcare exposure may prefer another approach. Someone who wants global diversification may think differently again. But one thing is clear, India's healthcare and pharma ecosystem continues expanding. Rising healthcare awareness, growing hospital chains, diagnostics growth, exports, innovation, medical infrastructure. All of this could continue shaping the healthcare story over the coming years. At the same time, remember this, pharma mutual funds are sectoral funds, which means concentration risk exists. Returns could look fantastic during strong phases and frustrating during weak periods. So instead of chasing recent returns, focus on your risk appetite, time horizon, and portfolio allocation. And maybe the biggest takeaway from today's video is this. Don't invest in healthcare just because it sounds defensive. Invest because you understand the long term story. Now, over to you. Do you think healthcare and pharma could become one of the strongest investing themes of the next decade? Or do you think the best part of the rally is already behind us? Comment below and let us know. And if you found this video useful, don't forget to like, share, and subscribe. See you in the next one. Invest wisely, happy investing. The securities quoted are for illustration only and are not recommendatory. Past performance is not an indicator of future returns. This video is for information purpose and does not constitute any kind of investment advice or a recommendation to buy, hold, sell a fund. Returns mentioned herein are in no way a guarantee or a promise of future returns. As an investor, you need to pick the right fund to meet your financial goals. If you are not sure about your risk appetite, do consult your investment consultant or advisor.